Hello, good afternoon everyone. Welcome to this weekly market analysis, or weekly technical analysis webinar. Thank you very much for attending. My name is Jasper Lawler. Just putting the risk warning on the screen. Obviously, have a read through this at your leisure. Giving you a brief outline for the webinar today. We're going to look at the major asset classes that are traded by LCG clients. So that includes Forex, like the likes of Euro dollar, pound dollar, dollar yen, indices, so Wall Street, UK 100, Germany 30, and also commodities, gold and oil. So I'm going to skip over to the LCG trader platform here. Let's start with the currency market. So having a look at the euro dollar. So this is the daily candlestick chart, zoomed out somewhat. You can see that we've been on a gradual downtrend for a while now, where any major pockets of strength in the euro have been sold lower. Looking more recently, you can see that we were in quite a decent downtrend at this point in time. We started to make higher highs, and actually the euro was starting to look strong, dollar looking a bit weaker. What you would have kind of wanted to happen for this trend to develop a bit more strongly would be probably just for the price to pick up from around here, or at least down near 113 or something, comes down here, rebounds up to make new highs. But we didn't do that. We actually failed at this previous resistance, and we struggled to even make it higher since. So looking at these three peaks through here, we've seen obviously every little pop up to this area, selling has come in. My thinking being that even if we do get through this area, potentially move through 113, a sign of strength coming back into the market. So what you want to see then after that is for 113 to fail. So the bulls tried to take control, failed to do so around this old resistance above 113, and then maybe with a day or two of closes below 113, opens up a further drop down to challenge these old lows at 111. Another scenario we're potentially looking at, given that we failed to get above 113 three times already, is we collapse through 112, which has been decent support of late. A drop through there, any rebound back towards 112 again, any little pocket of strength could be an opportunity to see the market drop back down to 110, the big round number for euro dollar, which we haven't been down to for a while. But nonetheless, if the market is continuing to remain soft, these big round numbers are natural targets for traders. Let's switch gears to the pound. So I tend to think that the pound is due a bit of a rebound, but still, me thinking it doesn't mean it has to happen, and there isn't any particular sign of it at the moment. So for that strength scenario to play out, you don't really probably want to be buying the market now that we're making lower lows and lower highs, which is pretty much what's going on. Lower high, lower high, lower high, lower, 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 low. In this current scenario, you'd expect lower prices. If we can pop back above through what I'd call a sort of zone somewhere in here, if we can pop it back above this zone below 126, dip back into it and then hold, that opens up a move back up through to 128 and these previous peaks through here. That is the bullish potential scenario that isn't quite available to us yet, but something to watch out for. At the moment, we're looking for almost, I don't know let's have a look at what the chart actually says for this particular candle. So you can see down in the left-hand corner that the low was 124.75, Yeah, okay. Oh, it looks much closer to 125 on the chart. So that was a close below 125. We had another one since. We potentially aiming for another lower close below 125 again today. So 125 holding as resistance. So I think anything near 125 is potential opportunity, especially depending on how today pans out. If we remain below 125, to target 123, but that should be a new low below that previous 124. Let's look at the yen. So the yen has been downtrending, but if you look at the MACD here, you can see it's been kind of stalling out at kind of the same levels despite lower lows being made. And then finally we had a big push up, made just about a higher high. But then as we hit that 109 and those old highs and this previous low here, the market got pretty heavily sold into, which is kind of understandable given the downtrend that preceded it. But we've dropped down, couldn't hold 108, but we were able to hold 107 so far. We've had a decent couple of candles rallying up. So maybe it is that we don't actually get back down to 107 again. Maybe this fractal gets confirmed. Excuse me, my voice is giving way. Fractal gets confirmed. We'll get a close or two above 108, and then any kind of pushback, any opportunities near 108 could be the catalyst for a bigger correction up towards 110. Obviously, what this resistance do 109, but it's been challenged a couple of times now. And if this higher low means anything, and if this shift of momentum in terms of what we're seeing in the MACD means anything, then maybe this flattening out leads to a little bit of a rebound in the dollar and less strength in the yen, which with this sort of scenario, you would imagine dollar yen is due a bit of a bounce if you think that equities are moving higher and general risk sentiment is good. And we do have the ECB this week, for example. If they indicate lower interest rates in Europe, that's again another reason for a bit of strength in the dollar. So we mentioned indices briefly there. Let's actually have a look at those indices. So I'll start with the UK. This is the daily candles chart again, pulled out a little bit. So we're looking at almost a year's worth of price action here. We've broken this declining trend line. So the market has been recognizing this with 4 fairly respectable touches, then the break above the old highs as well. The market looks quite strong. The FTSE looks strong. But we're correcting a little bit at the moment. If we zoom in, 7,500, big round number, basically where the market topped out before. Now we broke above it, we're retesting. And you see we're getting a decent little pop today. 7,500 might have held. And if that's the case, and we get a pop through this high here, we'll have to revisit how we imagine things panning out here. But an ideal situation would be that if we get a little bit more weakness in the market down towards 7,400, and that's a confluence of the next round number lower and this declining trend line, and offers us a bit more technical support around here to limit our losses. Switch gears to Germany. And you'll notice, in all these indices charts, I'm looking at bullish moves in the market. We are testing all-time highs in the US. I'll show you in just a minute. These markets have been perky for quite a while, and so you'd argue we're due a down move. But history tells us that it's generally been the best trade to buy these indices. So let's just go with what at least short-term history at least tells us. In terms of day trading or swing trading, generally buys have been the best. And if it does turn out that this trend completely rolls over, then obviously in the short term we're looking at sells. But still, to me, we're broadly bullish in these markets, despite all the risks out there. In the DAX, so I don't use Fibonacci's all the time, but it just so happens that this little spike low coincides. We've got this sort of spike now where we've got the big rally, is the 12,000 mark, and it's the 61.8% retracement of this rally, a little mini rally that we've had since the end of May. So if we were able to pull back a bit further in this index, then we can just target those old highs around 12,600 without going for anything too aggressive, just a challenge of the highs. But we've had a big enough of a pullback to enable us to do that, and the risk to reward to be worthwhile. Let's now switch gears to the US 500. So our proxy for the S&P 500. It's this little green area in here that's quite a confluence of potential support. If I just delete that, you can actually see what I'm talking about. We've got this little rising trend line through here, which is where the market stopped yesterday. It's just above this horizontal support, which is just above the 2950 level. We had two touches, a break, a retouch, a rally above the big 3,000 psychological number, and then a drop down again to here. So potentially this is all we need, and the market's heading higher from here. If we actually do break through that level, I don't think it's game off in indices, but it would sort of match up with the analysis from the other two indices. We're just looking for another couple of 100 points or so drop for better risk to reward for the next leg up. It may not come, and if we take out these old highs again, then waiting for this further drop obviously didn't pan out. But if we break the highs, you can obviously go for momentum trades at that stage with, just under a different strategy. Let's switch gears to commodities. I'm going to have a look at gold now. So if you're wondering what this big heavy black line is, if I jump out to the weekly chart, it adds a bit more color. Basically, you can draw a flat line here, or you can even draw a down sloping line through here. But basically, it looks like in gold we've broken above a technically significant level. But we have been testing these old highs through here. We did get a bit above them, but haven't managed to close the week above them yet. You can see we've been selling down from all these weeks, and based on this selling at the highs, not confident to finish the week at the high, which is understandable after such a strong rally. It looks like we're just due a bit of a bigger correction here. And so if we're looking at gold with a horizontal support, I'm going to move the high over here now as well. If we're looking at the horizontal support, something like this, it's like probably a median through here. That is why I've got the market rolling over down through there. So, a few people will look at a chart. If we were to get a down move like this, a few people will get worried when we take out these lows. But savvier people looking at the longer term picture might use it as an opportunity. Of course, they might not. The market might just completely tank and head back down towards 1,300 again. But assuming this bullish breakout means something, maybe we just get a pullback to that long-term resistance. It could be a bit further lower, obviously, if the market's paying more attention to that down sloping way of drawing that long-term resistance we've broken through, long-term support. But this, the only reason I'm saying this potentially is about to play out is we've had this big bearish engulfing candlestick and those sell-offs from the weekly highs. If we're able to hold 1420 for a few days, then maybe we've diffused the bearishness of that bearish candle. But at the moment, I'm looking for a bigger drop before trying to get bullish again on gold. Let's switch gears to the oil market. Different scenario, I think, in this. Gold and oil not really trending particularly in sync at all these days. Very much different factors. Obviously both based in dollars, and there is some change in Federal Reserve policy going on, but nonetheless, what I found interesting just in the last couple of days for oil, as you see, we had a little pop. So we had a big down drop, and then we had a couple of pop for the last couple of days. That was off the news that Iran captured a UK ship going through the Strait of Hormuz, which it was a UK tanker, in fact, I believe, holding some oil. So oil basically looks very much at risk of being the supply of oil from the Middle East very much looks like it's being disrupted or very likely to be disrupted at the moment. So that should be a positive for the price, i.e. there's just going to be less supply out there if it's being disrupted. But this is not a particularly enthralling move, given the kind of price action that you can see in oil. This has been very tepid. So it speaks to me of a weaker market that's probably concentrating more on the global trade war and the lack of demand for oil if that trade war gets even worse. And so we're just in for a little kind of tepid bounce before rolling over and retesting those lows around 60. If we can pop up to 65 and roll over from there, it obviously gives us that $5 potential target on the trade. And obviously 65, 60, they're the kind of big numbers that the big whales out there tend to pay attention to when they're placing their trades. It may be that we don't even get to 64, and that could be the case based on today's price action, where we jumped almost $1 and we're almost back where we started again now. We're below the 20-day moving average. After this big drop, there was a failure at this high, you'll note, drop, then actually a failure at this low. But I just tend to think that, yes, we pop into the range after that low false break down here, but then we roll over again at 65. It's something to look out for. If we get that pop to 65 and then fall over, start closing back below it again, that may be the sign that the weakness is about to come into the market more dramatically. If we close below 63 today, having gone so close to 64, that might be an opportunity just without quite the same risk to reward benefits. Thank you very much for attending. That's it for today. That's the snapshot of the charts that I was hoping to give you. I hope that was useful. Good luck for trading for the rest of the week. Jasper signing out.